Hello and welcome to FX Market Strategy. It's my pleasure to have you guys today. So we're going to talk about harmonic trading. If you guys are interested in learning more about the harmonic trading, this will be, basically harmonic trading is they came up with some certain pattern. They repeat themselves with certain ratios, and they said, okay, if we see this to happen again, repetitive, okay, then we would expect the same scenario and same result to happen again. Okay. So basically, it has been explained a little bit hard and difficult. We came up with a new way. Okay, we call it Harmonic Plus. Let's start into it. So just again, take this off right here. We're going to start with the ABCD pattern. So basically, the ABCD pattern is really easy, is nothing difficult. Happen when you see a trend coming down like this, okay? Then you have an up wave to a correction to a certain level. Okay, then the price will shoot back down again. Okay, like this. So basically, this is the ABCD. They give this A, and here is B. Then here a correction C. Then here is a potential reversal zone, a D. Basically, potential reversal zone. The idea is all the harmonic patterns are corrective patterns. They are not trending. This is the main idea. Okay, they are corrective pattern, but they could be so big. Is inside each leg you may have big trend. You can make enough money in it. Okay, but when we say corrective, what we mean after it finishes, okay, you're gonna have a wave to the upside. Okay, so basically that was a uptrend. Then you've had waves, multiple waves in different shapes in the opposite direction, and after it finish, then it will go back up again. Okay, in the classical technical analysis, that's just a correction. In the Elliott wave, that's either you call it a zigzag corrective wave or a flat corrective wave. Okay, so basically this ABCD is going to be either a flat, regular flat, expanded flat, whatever, but it's going to be a flat or it's going to be a zigzag. Okay. In the Elliott wave, you're going to have two shapes, this and that and this. Okay, and that's the flat. Okay, it could be a little bit extended here, could be short here, but the flat. And the zigzag is going to be like this. And the harmonic, both of them called ABCD pattern, is the same thing. Okay, guys. Okay. It's very important to know most of the harmonic pattern you're going to have in reality is after I have such a down wave, you're going to have here a corrective wave. Basically, you want to think between the 38.2 to the 61.8. Okay, that's the area where you would expect your corrective wave here to go up. Then after you get this confirmation with a price action, the price will jump back up and just start bouncing back. Okay, then you would be expecting this to go down. The thing is here, this AB, and here is C and D. Okay, so we knew about this. It's most likely is going to be between 38.2 to 61.8, this middle part right here, where I have the X. Okay, we're done with the BC. What about AB relationship to the CD? AB, okay, could equal CD. So this will be equal to this one, and that's a perfect case. It happens sometimes, or probably 20% only of the times. Sometimes AB and the CD, they will not have this relationship which is equal. Okay. Sometimes they're going to have this actually AB bigger than CD, and sometimes it will be actually smaller than CD. Okay. So you'd have, if AB is bigger, basically you have something like big like this, then a correction, then a wave small like this. and that's A, B, C, D. Sometimes AB is shorter, so you have AB, then a correction, then a bigger wave to the downside like this. Okay, that's when both of them are equal, just like this scenario. Okay, so you have AB equals CD, and you have AB larger than CD, okay, and have AB less than CD. Larger, is it in the pips, price wise or time wise? Usually it's gonna be both, but not necessarily. Sometimes there's gonna be a sharp fall, so you're gonna have bigger actually in the price, but less in the time. Okay, so we don't wanna confuse things. Let's talk about price only for now. Okay, leave the time. Okay, the best case scenario. Okay, if you guys want to take a screenshot of this or something, you can remove it. Okay, the best thing in time when you have something like this, AB, then you have CD, and you have this one, and actually have the same time. So if this time happened from here to here in 4 hours, then we would like to see this also happens in 4 hours. If it happened in 4 days, we would like to see it happen in 4 days. But this doesn't happen all the time to be consistent in price and time. Sometimes it does happen, but not all the time. Okay? So keep in eyes, there is a study for the price and there is a different study for the time. Just keep the eyes on the time, but focus more on the price, okay? Price is the king. Okay, so we've got an idea right now about the ABCD pattern. And we have said AB could equal CD, AB could be larger or smaller. Okay, so let's get to the chart right here and start actually studying the market. Right now, it's difficult a little bit to start actually determine where to start, where to end, and everything like that. Okay, things doesn't look too great, right? You don't know. Okay, okay, let's use the Dow Jones as an example. Right? Drawing and remove indicator. I'm just having Heikin-Ashi candles right here, guys. Heikin-Ashi candles, but it doesn't matter. You can have just use regular candles right here. Okay. We want to make things easy, so what we're gonna do right now, we're gonna go indicator and we're gonna just type zigzag. Okay, and you guys just gonna drop the zigzag indicator here, and you're gonna see why. Okay. Okay, can use this one, but we don't want all this noise, so we can just take it off. We don't want labels, we don't want lines. That's it. This is excuse me. Just want one regular line zigzag, that's all. No drama. Yeah, this one is good. This pip signal, I think it's okay. We just want a regular zigzag, nothing, no drama in it. You guys? So this. Okay. So why we are using zigzag right here? If you look at this one, actually you can also, usually it does have some setting right here. You can increase this value, or you can make it like, let's say 20 or something. Sometimes it just makes a little bit better. Okay. So it makes it smooth a little bit. If you guys pay attention, the prices, the lines, watch here what happens right here when you go down. it changed a little bit. Anyway, between 16 to 20, I think it will be okay. So if you look at the chart right now, just some lines, but if you look differently, you're going to find everything to be ABCD formation. If you take it from here, it's better to take it from the top all the way down here. You go down here to point B, you see a correction 54%, then all the way down here. We just need to have a better color here. This black is not very clear. This is not good. What happened here? What happened here? We have ABCD formation, right? If we can take this off here. If you look at A, the price did go all the way down to B, correct? All this distance. Then the price did shoot up to C. And this C was 54% correction. Remember I said between 38.2 and 68.1, 61.8, you're going to find to be most of the cases. And that's 54. It's exactly almost right in the middle, 50%, right? Then the price did fall again, okay? This 2.6, this is an extension of this price right here. This, if that was 100 pips or 100 points, that's 260 points down. This is a relationship between this one and this one. But we don't want to focus on this relationship. What we want to focus is about the relationship between AB and CD. Okay, so we want to focus about the relationship between AB and CD. Okay, so what I'm going to do, I'm just going to remove this. Okay, and I'm going to draw it again. But I'm going to use this right here. So we knew about this. That's a 50%. And this one right here. How much is this CD compared to the AB? What I'm going to get is the extension right here, Fib extension, and I'm going to go like this. For those who are new with this Fib extension, this tool right here, just about 3 lines, and 1 line is separated away. You take it, and first you want to measure 1 point, 2 point, 3rd point, then you want to calculate the 4th point. So basically, you get this tool, you stop right here, then you drag it to this point, then you click, then you drag it up like this, okay? Then this will give you the extension of this AB down here, okay? So hopefully this will make it easy. Guys, so right here we have 138%. 100% of the AB is reflected right here, okay? Extended right here, plus 38%. And you're gonna find most of the cases is between this almost 78% to 138%. Okay. Okay. So this right here was 100%. It did go almost 50%. Then it did fall down 138%. If you pay attention to something, I always relate to the main leg, and that's my focus right here. This AB is the most important thing for me. Okay. So this point C is 50% of AB, and this point D, the wave CD is 138% of AB. Okay, I'm not gonna relate to this one right now. Okay, guys, I'm gonna relate to the main leg, the AB leg, to the original leg. Okay, after the completion of the ABCD, we've got a really nice move up. Okay, but we're gonna pay attention to something again. So we have done this as an ABCD. We learned about this one already, okay? And we've got this one. So that's one ABCD, and we're finished with it. Can we look at this one right here as AB, then C, D, point C right here, then D. That's A, and that's B, and that's C, and that's D, right? So basically, we can have another harmonic pattern right here. Okay, let's highlight it with a triangle. Right there, guys. See this one? Okay, then this one right here. Oh, okay. So there's A, B, C, D. Okay. Can we use this one right here? Please focus with me because this is gonna get a little bit confusing. See this one right here? With this one, we're gonna call this AB, then we're gonna come down to C, which is right here, then we're gonna go back up to D, and we're gonna make another A, B, C, D formation with this one. See where I'm going? All the market is just moving this way. Does this make sense? Oh, it started getting a lot of A, B, C, D. Yes, all the market is just moving in A, B, C, D formation, okay? And that's the main thing. Can we get this one down right here? Yeah, see? A, B, C, D. This one. If we take this wave down here, then correction up, then wave down. Okay? So this is gonna make me draw this one right here, like this. And then we have another A, B, C, D formation. Okay? Remember, we already have this one as a B, C, D. So right here, correct? And previously we've had this one. I'm using different colors, so it will be easy to detect. Okay. So basically, all the market keeps moving in A, B, C, D. That's it. Okay. All the point is to get the percentage between each leg and the previous leg. Okay. Again here. Can we use this one? Moved from here, this point to that point, then come down to correction, almost the same thing, then big one up. So basically this one, if we want to draw it, it would be something like this. Then it did come down, then it did shoot up big time. This one right here. Okay, so if we make a triangle right here, we can see this one. Okay, guys? Here we go. See this A, B, C, D? So basically, if we call this A, B, C, excuse me, point C actually came to the same level as point A. Point C right here, if this is A, B, C, D, point C came to the same level. But point D from this leg was almost double of this one. If you take the retracement right here and you go like this, measure from here to there, 161.8. The 161.8 right here. See this one? 1.6. Okay. So basically, you are saying this leg. So I'm just gonna, this leg, guys, right here is 161.8 times of this main one right here. Okay. I hope this makes sense. Okay. Then what we can do, we can say, okay, this one did go up, then come down, then did go up again to make an A, B, C, D, correct? Or we can say this one did come down first, okay? It did go up big time, then it did come down a little bit. So basically, you can connect this one, and you can study the percentage easily and understand how the market is moving, okay? I think this down one is very clear, right? Because if you connect this one to this one, then this one right here, I think is very clear, A, B, C, D, right? If you have such a scenario, sometimes it's better just to take it to this one. Then it will make more sense. So consider this all as one wave. See how the market looks like? If you can focus on the market for any chart, you start seeing things like this, then you're going to be a master in the harmonic trading. So you can start saying, oh, that's the down wave, you had a correction, the down wave, okay? then the price starts building higher lows. Excuse me, having a bad cold. The price starts building higher lows, okay guys, right here. Oh, but it didn't break this high yet. But we're having those harmonic shapes. So basically for every wave you can determine where the second wave is going. So this wave was fast and down. Okay, you get a correction, then you would be expecting after this start coming down, you would expecting this one to be equal this one. It did go a little bit above 38, above the level. How can you trade this one? Okay, what's the percentage between this wave and this wave? This is easy. You can take this and go from here to there. And that was 200% exactly, guys. Okay. After it did fall from here, the price starts shooting up like crazy. Watch out, you've had a previous support to resistance right here, of course, because the quarter 3 and the prices, the companies start to announce their revenue and stuff, so that's why the stocks and the Dow Jones are really high. Can you tell me now, how can I think about this one? See, all this noise, I don't care about all this noise. What I'm gonna do right now, I'm gonna think about this low, okay, and this high as AB, and that's C, and I'm expecting point D up here. So what I'm gonna do, I'm gonna do a big one of these ones. That's A, B, C, and I'm gonna be, and point C was 58%, so I'm gonna expect this to be just 100% as a start of this one. So basically, if I go from here to there, the Dow to have 100% ABCD is going to be here, and to have 138 is going to be here. So basically, that's an area where we can see a correction. Guys, let me make this a little bit. See what we are looking at right now? Inside this AB, how many A, B, C, D did we have? A lot. But at the end, all this small A, B, C, D did make a big AB. Then down here, in this BC, it did come up in A, B, C, D formation. Okay, so each leg can have multiple legs inside in the bigger picture. Okay, guys. Then, okay, so when I'm looking at this price, when it did go up here, start coming back down, then I will be, after the price starts to reverse and say, okay, I'm having a bigger A, B, C, D formation right now, and possibly this is gonna just keep shooting up to you. Okay, guys. Let's have another example of this one, of the bigger style one. See, this one is very clear A, B, C, D formation right here. Sorry, I'm just keeping moving the thing. So guys here, you say, okay, that's an A, B, that's an A, B, then that's a C, then you would be expecting this to be almost equal to this one, 100%. It did come up a little bit bigger. It's good, no problem, okay? See, that's how you actually start, catching this one. Another A, B, C, D formation right here, very clear, right? Hey guys. If you go to different time frame, 4-hour time frame, so we can actually see bigger. Another ABCD bigger one right here. You can see this one. Such a big wave up, then correction down, then shoot back up again. Okay. So basically, once you have this, This will be very good to start thinking about, okay, I'm having the ABCD formation right here. Guys? Okay. After this, what you look at is you have a bigger ABCD formation. See this big one? Then just have a correction right here. Then I would be expecting to have another one as big as this one. Hope this makes sense. Guys? See how we made ABCD first, then we combine them together to make a bigger AB? So here you had a ABCD formation also. Okay. After this was finished, that was a really nice move. It's very important to look at it's very, very nice, right? The relationship between this leg and that leg. So basically, if you want to know, just to grab this Fib extension, just to go like this. That was 100% exactly. Amazing, okay? 100% exactly. That was amazing signal. So guys, correctional wave. Okay, I think someone got something right here. See guys what I'm talking about? Okay, we can consider this to be like A somewhere here, right? Let's take even this one here, A, B, B, C, C, D. Okay, so if I want to grab this one to like this, I'm gonna call this A, B. Okay, then I have BC. I want to expect what's gonna happen after here. What I do, I take this one as a copy paste. Say, okay, I'm gonna expect this one to come down here and go like this. Unbelievable. Look at this, guys. Amazing, amazing. Just keep moving to the same level. Then after it reach, also in time, not only in price, in time. The same amount of time it did take here, it did take there. See this? This time right here. Right here, the same time. The same exact time. How many days and hours and everything, it did take exactly. That very nice pattern. Very nice, very nice. It's nice to see the correction of this one is 50% or 61%. So we take the retracement, Fib retracement. That was actually 61.8 exactly 61. That's what's called a perfect ideal ABCD pattern. So basically, it is perfect ABCD. This happened when AB equal CD and E is 61.8. Yes. So when you have a pattern AB, then you have 61.8 correction, then you have this point equal to this one. Basically, it looks like this exactly. Here you go to the 61.8. Then you have this as big as this one right here. Let's make it exactly. Okay, guys. So that's a perfect ideal ABCD pattern. Okay. One point C is 61.8 right there. Okay. Of course, I made this bearish. I made this to the downside, but this one to the upside. Okay. And you have this one equal to this one. You have AB equals CD. That's a perfect pattern. Look at this, another ABCD. Look at this one. after the coronavirus, what happened here? You have such a strong move all the way here, okay? Then you've had a little bit of correction. Then you've had another shoot up here, okay? How you study this one? You say, okay, what is the retracement of this one? It's a little bit less than 38.2, okay? About 33 or something. Why does this happen? Because the central banks were pushing so hard, so that's why the price didn't have a deep correction, okay? They were afraid the price will actually collapse again, so they were pushing too much money. That's why the correction was not deep, was very light here, okay? You want to know the relationship between this one and that one. You just take a line like this, okay, and you take a copy, or you just take the same. Sorry. Take this line as a price wise right here. See, guys, it was the same exact time before the correction happened. See the relationship right here? It did take the exact time. See how many days here and everything. See how many days in this between here and there? 77 days. This one did take 77 days. Then it did have a correction. After the correction, it did take about 82 days. Okay, 77 days here, 82 days here. Very close, very close. After this, it did have a correction. Okay. How many days it did take here? 88 days. See the rhythm, guys? 88 days again. 77, 82, 88. Very close, very close. Okay. Okay, I hope this helps, guys. You get an idea about the ABCD pattern. How can you read the chart? You know, how can you start to see how what we did draw right here was very. See, we did zoom it so big, so much. We go to the 1 hour time frame actually. See, guys, how it looks like. When you zoom it, it looks so small, but when you keep focusing in details, it looks much bigger and much nicer, and actually starts seeing things much nicer. Okay. Is there any question? Okay, I hope you get an idea about the ABCD pattern.